Hello, my friends. Brett Pattison coming at you from the financial capital of the West, the land bountiful here in Utah, joined by the chairman.
How you doing, Brett?
Hey, I'm doing great.
Good.
It's been an options paradise the last, well, since inauguration day, Brian.
If you walk by Brett's office, especially the last few weeks, his door's shut and he's just busy and they're trading.
Yep, and I drink these caffeinated beverages called Jocko, and you can see empty.
Are you a paid sponsor?
I'm not. I should be. I
Okay.
should be.
Yeah, you should.
But it's been a fun part of the year, and I say fun, and people are probably like, "What are you talking about?" But let's talk about the market. Let's talk about three things today, Brian. Let's talk about the market. Let's talk about the market turmoil, the tariffs. We will address what should people be worried about, or if anything, or what should they be focused on, really?
Right.
Was that second thing. And then the third thing is, as always, it's an annual event around here when Warren Buffett has his annual letter, and we want to talk about that, what both of us learned from it, or what was reiterated, and what can everyone else learn from it. So that's what we want to talk about. But for everybody listening today on whatever platform you're on, there is a video, and I'm going to share some charts. And so if you're on YouTube, you'll be able to see those. I will talk through them, but I'm going to share where we are year to date, and then I'm going to geek out on a few things. Okay, so year to date, as you can see on the screen, the NASDAQ is down 4.53%. The S&P 500 down 2.28%. And hey, I make fun of bonds all the time, and we may make fun of bonds later, in fact, but they're up 1.64% so far this year.
And really up until today, I mean, the markets were, well, I think the Dow was down slightly as of yesterday, but today was a big down day and markets kind of went negative this year.
Yep. It's there's been a lot of volatility, and I would say the volatility, some of our clients are going through volatility for the first time, and I'm going to say downward volatility, right? If you look at where we are off of our highs, which is what we're seeing on this screen, the S&P 500 off of its highs is down 6.63%. That's off of its all-time high. The NASDAQ is almost down 10% off of its high, so down 9.25%. And that's really, when you turn on the news and all these media outlets are trying to strike fear in everyone so that everyone freaks out and keeps watching their network, those are the numbers that you'll hear. The NASDAQ's almost down 10%. So some of our clients are going through this for the first time. They've been with us 2 years. They've never really experienced anything. It's been a good 2 years. Some of our clients have been through, gosh, how many of these have we experienced since 2000, Brian?
A lot, it seems like. I was actually talking to a client earlier today. He's been a client for over 15 years. He's been through this before. He just commented, yeah, it's a little difficult, a little unnerving. And I think it is for everybody a little bit. I think, and one of the things we talk to our clients about all the time, and those who've been listening to our podcast over the years have heard us talk about anchoring to a certain number, anchoring to our all-time high or whatever it is. And, that just makes it a little bit more difficult when you think, oh gosh, I had this and now I have this. And I don't really think about it in that terms. I've sort of trained I've trained myself to think about, what's this 3 years, 5 years, 10 years down the road, and not really get too concerned about the day-to-day market movements.
Yeah. People anchor all the time. That's right. That's psychology. Let's get into psychology for a second. They're for the first time their account hits 1 million or 5 million or 10 million or 30 million, whatever it is. And they anchor that to themselves to that 1 million, and then it goes down 10% or 15% or 20% or whatever it is.
Yeah.
And here's what kicks in. Are you ready for this, Brian?
I think so.
This is called the prospect theory from 1979 Nobel Peace Prize winning study. This is what they found. that if you were to lose $100, the pain is 2 times more than making $100. Why? Why is that, Brian? Why is it more painful to, hey, maybe you even started at 100,000 and you hit 1,000,000, but if it goes down to 900,000, oh, the pain. Why?
So it's 2 times more painful if the market's, I'm trying to,
So if you were to make $100, it feels good.
yeah.
Okay. If you were to lose $100, it's twice as painful.
Yeah.
Or you feel it 2 times more.
Or maybe the emotion's more 2 times
Yes.
more, right?
Yep.
Okay.
Exactly.
Yeah, that makes sense. Yeah, I mean, I don't get too emotional when when I'm making money, and it's just sort of, oh, that's great. And then when the market goes down, it is a little bit more emotional. It is a little bit, it's definitely more painful, but I think there's more emotion attached to pain or disappointment than there is possibly, maybe good events.
Yeah. Yep. I mean, there's a number of reasons as to why that is, and probably a lot of people are feeling that right now. If you think of our evolutionary roots, where we came from, right? It's shelter, food, water. That's how we survived. And so any pain that comes in, our natural instincts is to fight it or to stop it, or you know, if it starts storming, you build a fire, right, to keep warm, so you don't die. You stop whatever pain is occurring. In the markets, it's a little harder to stop it. That's like the worst thing you could possibly do.
Well, the instinct is to stop it. I mean, that's the instinct.
Yeah.
That's actually the thing that you shouldn't be doing. And in most cases, your instincts are right when you're trying to survive. But when it comes to managing your financial affairs, a lot of times your instincts are wrong as far as, what's the best thing to do.
You're the exact opposite of what you think you should be doing.
Right.
Yep. Yeah, it's you think of negative emotions, and losing money is negative, right? Versus really feeling good about something. Negative emotions are just stronger. I mean, when somebody ticks you off on the road, you really get mad. When somebody does exactly what they're supposed to be doing, driving, and they merge correctly, you don't even really pay attention to it.
Right.
These negative emotions. So anybody experiencing those negative emotions, Brian, I've driven with you. I know those negative emotions are.
That sounds like my wife.
I'm kidding. I'm kidding. You're great.
Here's something where
those negative emotions are very powerful.
Yeah, but on the other hand, you win a Super Bowl or win the World Series, that would be a huge emotional reaction on the upside, maybe offsetting, something, maybe a negative emotion. There are some things where I think, or positive, where I think your emotions would be pretty extreme on the upside.
Yeah, I appreciate you bringing that up as a Yankees fan.
That's right.
That. Yeah, thank you.
I was thinking of you when I said that.
The one thing about the market is, and I'm going to geek out in just a minute, because I think as we talk about volatility and we bring up negative emotions, right, in a NASDAQ that's down 9.25%, you got to understand, folks, that's the opportunity. Okay, and I'm going to bring up another chart, and this is me geeking out. This is options. This is looking at buying opportunities. I follow, and a lot of you probably do too as well. And on my screen, I have the S&P 500 and also the volatility index called the VIX. Okay, and the VIX works completely separate than the market, or contrarian to the market. All right. And the VIX is known as the fear gauge of the market. So when it spikes, there's a lot of fear. And then there's that CNN Money Fear and Greed Index, which is showing extreme fear in the market right now, which coincides with this VIX. But if you look at this, what I look for good buying opportunities is when this fear gauge crosses 20. Okay. Every time that this fear gauge crosses 20, it's a great buying opportunity. We're looking at a 5-year chart and we're going back, and you can see all these spikes in the VIX. Now, 2022, I mean, the VIX was up near, gosh, 30. Great buying opportunity in 2022. In late 2023, VIX hits 20. Look at the market. If you're looking at this chart, the market bottomed at that same time. Same thing in April of 24. Same thing in October of 24 and August of 24. Now we've got a VIX that spiked up to 23. So should we be fearful right now? What does Warren Buffett, Brian, what does he say about fear?
Yeah, it's a great quote. He says, "Be fearful when others are greedy, and be greedy when others are fearful."
So if this gauge crosses 20, fear.
Yeah, that's the time to get greedy. That's the time
Yep.
to look for opportunities. Yeah.
That's exactly right. So as we see this market come down on the uncertainty that's in the market, going back to the psychology, hey, I got to sell. I got to stop the bleeding. I got to stop the pain. When in reality, you got fear spiking. That's the time to buy.
Right. And it really boils down to when there's market volatility and stock prices are going down, that's when you're getting more value for your money, more value for each dollar that you invest. That's the math behind it, is you're getting more. It's like you should buy your groceries when they're on sale, and you should buy your stocks when they're on sale. You don't sell stocks when they're on sale, you buy them.
Yep. And price and value move in the opposite direction.
Yeah.
So now the prices come down, fear is high, value's better than it's been in a long time.
Value's better today than it was yesterday or a month ago.
And I will tell you folks at home, I have been, gosh, I don't even know how many trades I've made in the last 3 weeks. I couldn't even count. It's got to be over 20,000 easily, in our portfolios. Why? Because volatility, fear, that's when you take advantage of it. And so those folks at home that are a little bit more nervous, turn off the TV, go for a walk. Don't be. We got you. We've been through these storms before, so we got you. So
that really speaks to our whole methodology, our process of owning incredible, great businesses that can weather storms. I look at our portfolio. I'm confident that 3 years, 5 years, 10 years from now, our portfolio of companies are going to be around. They're going to be great. They'll be prosperous, and as owners of those businesses, will benefit.
Yeah, and that I'm glad you mentioned that, Brian. That kind of brings up the second point is all this tariff talk. We did a podcast on tariffs. It's the last podcast we did. We don't think that tariffs are bad because it levels the playing field, right? In what we think should be a free trade global system, right? The fact that we're not treated the same as other company or other countries. I mean, it's just all backwards.
Right.
So.
Yeah. I mean, the tariffs, it does create some uncertainty, and markets don't like uncertainty. They like to know exactly how things are going to play out. And so the uncertainty is creating some fear and some volatility in the market. And, we don't know exactly how the tariff thing is going to play out. I know that when I hear about tariffs on US products that we export, 20%, 50%. I'm like, well, I can't believe that. How is that possible? But apparently that's happening, and I get it. And I think, I think Trump and his administration are just saying, hey, let's level the playing field. I'm hopeful that we can have free trade and that we don't have to have any tariffs, and that we just have free trade out there. And that's what I'm hopeful of. And we'll see how this plays out. But bottom line is, I think the tariffs are a temporary thing. I don't think, at least the impact will be temporary. And we'll see. I mean, but I know
So,
we own great businesses.
so you feel if folks are worried about this tariff situation, you feel you use the word temporary for tariffs, meaning um, there's going to be a resolution to these tariffs, hopefully by summertime. It's not going to drag on for 3 years. So tell me this, when a resolution occurs, what happens to the market?
Well, I think uncertainty will be reduced, and that's usually very positive for markets. When you have more certainty, in fact, when you talk about value in a business, the more certain of you are of a business and its cash flows over time, that raises the value of that business. I mean, it's almost like gravity. I mean, that's what happens to stocks. And so as you reduce uncertainty, valuations will rise. That's at least that's my expectation, and I believe that will happen.
Yep, which valuations rise means the stock market rises, right?
Yeah, I
And the
mean,
stocks we own.
I think Trump's goal here is for free trade and fair trade. I mean, I think that's what he's trying to do. And I know a lot of us don't like his approach and his methods. How he does it, but it seems to be pretty effective. And we went through this 4 years ago. I think you just have to understand that there's this is just kind of how he operates. And he's a New York City real estate developer, and this is just how he does business.
Yeah, his method of delivery doesn't help create any certainty. It's even more, it's uncertainty magnified, right?
But
But
that's how he negotiates.
that's
That's
how
how
he
he gets things
negotiates.
done. Yeah.
Yep. And that's what the majority of Americans voted for. So,
Right.
we're optimistic that the best days of America are ahead, which would make us buyers, not sellers of the stock market or any of the businesses within it. So,
Well, and I think as tariffs come on we talk about this all the time, Brett. Businesses pivot, they adjust, they say, okay, this supplier is going to cost more because it's coming from this country or that country.
yep.
What are our options? Let's look around. Let's adjust. Let's pivot and try to minimize. And so all of our businesses, I think, with great managers, are going to be that's what they're going to be doing. If these tariffs are sticky and stick around a while, I mean, I think our companies are going to look for and we can talk about specifically some of our companies, but a lot of our companies that we own, in fact, I'd say percentage wise, as far as the bulk of the portfolio, aren't really affected that much by tariffs. We have a few companies that would be if these tariffs stay on or long term, but a lot of them are not.
Yeah. Yeah, that's interesting what you said. And that actually leads perfectly, Brian, when you talk about businesses navigating their way through it. Let's move to that third topic, which is Buffett and his annual letter, because both of us, have a few things we wanted to mention. But I think when you talk about bonds versus stocks, I mean, Buffett in his own letter this year, and he's done it many, many years, he talked about the very thing you're mentioning, right? Tell us what stood out to you, and let's highlight that fact about great businesses.
I've been reading Berkshire annual letters since 1993, a long time. And I read this Saturday morning it came out. And the thing that stood out to me, in fact, I cut and pasted this paragraph here, or a couple of paragraphs, and sent it to you and Spencer.
Yeah.
It says on page 7 of his letter to shareholders, it says, Berkshire shareholders can rest assured that we will forever deploy a substantial majority of their money in equities. I mean, that's one of the things that everybody talks about all the time, is how much cash that Berkshire has, and that he's been accumulating cash. But he's just saying here, the bulk of our money forever will be deployed in equities, and mostly American equities, although many of these will have international operations of significance.
That's something else too.
Yeah, for sure.
When you talk about American, you're talking about a kind of a risk premium that you're paying for these American businesses, so you avoid the nonsense of other continents.
Right. And you think about some of his big holdings like Coca-Cola, who's, but the majority of their sales is outside the US. I mean, they're a global company. And then he says Berkshire will never prefer ownership of cash equivalent assets over the ownership of good businesses, whether controlled or only partially owned. I think that's very interesting. He talks about never prefer ownership of cash equivalents. Well, guess what? That's what he's been accumulating this year.
What is it though? What's cash equivalent assets?
That's like short-term treasuries, money markets.
No.
That he says Berkshire will never prefer ownership of those types of assets. That is not his preferred way to deploy capital, is in those sorts of assets. And then he talks about in the next paragraph why that's the case. He says paper money can see its value evaporate if fiscal folly prevails. And he's talking about, US. I mean, I think he's really calling out the US debt, how much debt we have. We need to get that under control for sure. He says in some countries, this reckless practice has become habitual. In our country's short history, the US has come close to the edge. Fixed coupon bonds provide no protection against runaway currency. And what he's talking about, runaway currency, he's talking about inflation. That's exactly what he's talking about. And what happens is the US government, what happened in COVID, we printed a lot of currency, runaway currency. That's what he's talking about. And that creates inflation. And
you know what's interesting here? You have Warren Buffett, who's a Democrat, talking common sense, saying, no, we're going to prefer businesses over money market funds, essentially, or treasuries or whatever it is, because of the way that our country and other countries are managed. The debt is unsustainable.
Yeah, we have to take care of business. We have to balance the budget. We need to get our fiscal house in order. There's no doubt about it. We need to do it, whether you're Republican, Democrat, or whatever. It doesn't matter. We have to do this, not just for us, but for our kids and posterity. Yep. I think it's really important.
Then the next part, read that next part, because this is going back to what you're talking about, businesses, but also why he prefers.
Yeah, this is
over government.
This is really interesting. Yeah, he says businesses as well as individuals with desired talents, however, will usually find a way to cope with monetary instability as long as their goods or services are desired by the country's citizenry. So too, with personal skills lacking such assets as athletic excellence, a wonderful voice, a medical or legal skill, or for that matter, any special talents, I have had to rely on equities throughout my life. In effect, I've depended on the success of American business, and I will continue to do so.
So what does that tell you about, summarize that?
Well, I think it's just super important that despite, he talks about his lack of athletic excellence, or may not be the smart. I mean, Buffett's smart, but he talks about, there's smarter people out there in the world, but he is relying on, his success is relying not necessarily on his athletic abilities, but owning American business. I mean, that's what he chooses to do. And I think that's an interesting thing. I think no matter how smart you are, talented you are, all of us can participate in this incredible economy, country that we have, despite problems. We have warts and problems and sores and things like that. But American business is the envy of the world, without a doubt. And we are the envy of the world. We have the best businesses in the world, the best universities, and we have natural borders. We have a lot of things going for us in the U.S. We have friendly neighbors, Mexico and Canada, and so the U.S. owning American business is a great way for kind of even the playing field for those people who may not be the smartest, the most athletic, and et cetera.
And going back to the tariffs, okay, if we put that in instead of runaway currency and inflation and bad government, you could say the same thing. If you buy good businesses with good management, that management is going to figure it out. They're going to pivot to overcome tariffs. They're going to pivot to overcome runaway currencies. Inflation. They're going to pivot and do what they need to do to continue to increase earnings for their shareholders.
Yeah.
That's why you buy good businesses.
And I don't think either one of us are saying that tariffs will not have an impact on our economy or business. I'm not saying that. I don't think you are either. I mean,
Oh,
but I do believe, I mean, if we've watched this before, with Trump, he wants America to do well and be successful. And I think he really believes that this is a way to do that. And we'll see how it plays out. But I believe that we will figure things out. And I think there will be a lot of negotiation. And I do think that I'll be surprised if we're talking about tariffs like we are today a year from now. There might be some mention of tariffs, but I'll be surprised. We'll have to replay this a year from now, Brett, and see. But I do think this will be a temporary thing, and
I do too.
I think we'll get past it.
Yep. Yep. And just as the VIX is popping above 20, that fair gauge, which is a good opportunity to buy, I think it's going to pay off for us in the next couple of years by buying. So think long term, not what's happening in the short term.
That's the hard part. I mean, that's what most people I think struggle with is, it's here and now, the headlines, but if you think out 3 years, 5 years from now.
Yep. And this is the last thing I'll say. Okay. I'm gonna share what I love about Buffett and his letter next time. But I'll say this, just in closing. When Joe Biden won the presidency, we had a lot of calls from our right-leaning clients saying the country's over, sell, let's get out. We didn't. We talked them off the ledge, right? We didn't sell, and it's good because the market went up. Now I've had a lot of calls with our left-leaning clients who suffer from the TDS, right? They hate Trump for whatever reason, and now they're saying sell. The advice to them would be the same as when Joe Biden was elected. We do not look at the political ideology. Ignore it. If you're watching the news and it's driving you nuts and making your fear and anxiety go up even higher than it normally is, turn it off. Go for a walk. Go skiing. Go, I don't know, golfing. It's almost golf season. Go to a spring training game. Something.
Buy a great business.
That's even better. Brian buried it. That's all we have. That's it. Let's end on that.
I agree, Brett. I mean, it's the daily news. It can be stressful, and I think you focus on what really matters, and what really matters is that we own wonderful businesses, great businesses, and usually what happens in Washington D.C. we overplay and overemphasize, but yep. We've talked about this many times, whether it's a Democrat or Republican in office, the long-term returns doesn't really matter. It's just like the market goes up, whether there's a Democrat or Republican. It doesn't over time. There's no really favoritism to either one.
Amen. So if you have extra cash that you don't need in the next 2 years, call Katie and client service team, and let's put it to work, because there are opportunities out there. So to buy good businesses, Brian, as you said, I love it. With that, my friends, we'll let you go until next time. Bye now.
Thank you.
This is a purely public broadcast and is not intended to be personalized financial advice for any individual specific situation. Each individual's financial situation is unique, and the topics discussed on this broadcast should not be relied upon and/or considered as personalized advice. Specific financial securities discussed are not intended to address any listener's particular financial situation and should not be considered recommendations. This is for educational purposes only. For more information, please contact Iron Gate Global Advisors at info@igga.com or by calling 888-591-0334.